Everyone, tonight on Business Live, threats to inflation rate and growth force Monetary Policy Committee of the Bank of Ghana to maintain policy rate at 13.5%.
You would see that the monetary policy rate itself is at 13.5%. So we have done our part in signaling the direction of interest rates. Unfortunately, that transmission to the longer dated instruments will depend on the stance of fiscal policy.
Government cautioned yet again to stay within budget as Ghana's debt now reaches 335.9 billion cedis.
Is that government wants to do projects like the project 111. Where government is going to get the money from is a little bit of challenge.
Also ahead tonight, NPA assures public of maximum protection against cartels amidst rising crude oil prices on the international market.
As a regulator, we want to assure you again that we are not going to allow cartels to be formed. Our act mandates that we make sure no cartels are formed, whether be it in pricing or be in supply of petroleum products. So we want to assure the consumer that the cartel does not exist.
Thanks for joining us. My name is Darryl Kwao. Details right after this break.
Hello, my name is Nathaniel Atto. You can catch up with all the fun and inspiration on the Joy Sports link here on Joy 99.7 FM, together with all other shows over and over again. It's very simple. All you need to do is go to myjoyonline.com/podcast and relive all of those fun moments over and over again. Joy 99.7 FM, your radio for discerning listeners.
Joy 99.7.
Welcome back to Business Live. First up, threats to inflation rate and growth have forced the Monetary Policy Committee of the Bank of Ghana to maintain its policy rate. The committee kept its key lending rate for commercial banks at 13.5%. Now, this is the third time since May that it has left its rate unchanged. George Affe has more in this report.
The governor of the Bank of Ghana, Dr. ERNEST, in announcing the new policy rate of 13.5%, noted that there are still some other sectors in the economy that are yet to pick up, hence the decision to keep the rate unchanged. On issues about reduction in interest rates in the country, the governor noted that a lot more still needs to be done on the fiscal side to drive down the cost of lending in the country.
You would see that the monetary policy rate itself is at 13.5%. So we have done our part in signaling the direction of interest rates. Unfortunately, that transmission to the longer dated instruments will depend on the stance of fiscal policy. And until we see effective fiscal consolidation, you would continue to see this stiffness in the longer dated end of the curve, and it buttresses the importance of further fiscal consolidation to reduce the demand for funds to finance the budget.
The governor of the Bank of Ghana was optimistic that inflation rate would end the year still within the projected target, assuring that there is no need for us to panic. On the Ghana City, Dr. Ernest Addison said they are taking the required measures to deal with the recent pressures on the local currency.
This is really the decision that we took because we thought that the risk from both ends were balanced, right? We're looking at the risk of higher inflation and the risk of a lower growth, and on the basis of that, we left the rate where it was. So we expect that going forward, inflation would continue to stay within our target band. Obviously, if we sense that we have a higher risk of going outside that target band, then we would be required to act. And for now, we don't think that would occur.
This is what the governor of the Bank of Ghana had to say on issuance of more coins rather than notes for the 1 cedi and 2 cedis.
You would recall that this was a note that was issued as a commemorative note. So commemorative notes are not notes that you continue to print, right? And therefore, what we have done in the last 2 years is to introduce the 2 cedi Ghana coin, right? And the 2 cedi Ghana coins, I believe, are circulating, and you would expect that eventually they would more or less play the role that the 2 cedi notes are playing. Both the 1 Ghana cedi note and the 2 Ghana cedi note would eventually be phased out because they are not cost effective in terms of the printing costs of notes that circulate very widely and they come back very torn and soiled and very difficult for currency processing machines to process them. You should have bales and bales of 1 cedi notes, which we are not even able to process. So the view in the longer term is to more or less, get out of the notes of 1 cedi and 2 cedi, and then use the 1 Ghana cedi coin and the 2 Ghana cedi coin.
Dr. Ernest Addison also announced that it's currently working to deal with the challenges facing the savings and loan sectors as some firms are struggling to maintain liquidity.
There are some rogue microfinance institutions out there who would do anything. We've cleaned up the sector, but there are 1 or 2 difficult ones out there which would find all kinds of reasons for not being able to make depository payments. As you know, the government had tried to pay off most of these deposits, apart from the fund management companies that I believe the process is still on. Unless this particular microfinance company has placed funds with these fund management companies, I don't see where the difficulty is.
On the banking sector, the governor noted that they still remain strong despite threats of the 3rd wave.
Now, each Ghanaian is expected to pay a little above 10,900 Ghana cedis if the 359.9 billion cedi public debt is shared amongst the population of 30.8 million. The country's debt went up by 3.5 billion cedis in June and July to hit 335.9 billion cedis. It is equivalent to 76% of the total value of goods and services produced within the economy. However, the rate of borrowing appears to have slowed down based on the data from Bank of Ghana. The increase in public debt stock was largely from the surge in domestic debt, which shot up by 3.1 billion cedis. Here's reaction from Head of Finance Department at the Valley View University, Dr. Williams PEPRAH.
Debt borrowing from domestic is around 24.5 billion, which is equal to the item 1 item. The moment government decides to admit and pay labor a higher wage based on the situation what is happening in the country, government might have to go and borrow more money to be able to meet this request.
Well, you have called on government to stay within its budget. It's quite clear from your perspective that government isn't staying within its budget. How does government, maintain its spending discipline?
The government must look at some of the expenditure items, recurrent expenditure items, which they can do away with or maybe postpone. And once they're able to do that, we'll be able to stay within the budget. The critical factor is that government wants to do projects like the project 111. Where government is going to get the money from is a little bit of challenge, which means that probably monies that we are supposed to use for other expenditure items will have to be channeled. And it's going to have a major impact.
All right. That was Dr. Williams PEPRAH there. You're watching Business Live. In other news, the National Petroleum Authority has assured that it is keenly monitoring activities of oil marketing companies to avoid cartels which would exploit consumers. This follows a trend of increase in petroleum products on the world market. Addressing stakeholders on petroleum products pricing formula post-deregulation, Head of Pricing at the NPA, ABASS TASUNTI, promised that the authority is monitoring the OMCs and will ensure that nothing untoward happens in the next pricing window.
The engagement with the stakeholders is part of the input mechanisms by the NPA towards the review of the deregulation policy as well as the pricing formula. The issue of cartels in the petroleum sector has been one of the major concerns raised by some civil society organizations. According to the head of pricing, ABASS TASUNTI, the NPA is doing everything possible to protect consumers, although there are no facts indicating any form of cartel in the industry.
If there was a cartel, the margins would have been very stable and flat. But you can tell that the margins of the OMCs have been dropping. They move. They are not stable. A cartel would want to set a margin to more or less benefit themselves. But where we have margins that go down, up, down, sometimes going so low, that you see that it is a reflection of market forces at play. It is not a cartel, a market that has a cartel. But as a regulator, we want to assure you again that we are not going to allow cartels to be formed. Our act mandates that we make sure no cartels are formed, whether be it in pricing or be in supply of petroleum products. So we want to assure the consumer that the cartel does not exist, and we are going to make sure one doesn't exist in the industry.
All inputs from the engagement will be presented to the economic management team before a final decision is made. The chief executive of the NPA, MUSTAPHA ABDUL-HAMID, believes that this is a great opportunity for the country to improve upon the policy initiatives of the government in the petroleum downstream sector.
I want to try today to harmonize what we say with what you hear and hopefully bring clarity to the matter, and then to hear you also. And then I'm sure that going forward, we can all have a common position on this whole business of petroleum pricing deregulation, so that ultimately we can come back to the Ghanaian people, all of us together, with a policy paper that assures the Ghanaian people that their interests are being catered for by government. And if indeed, at the end of the process, the committee feels that there are fundamental flaws with the structure as it is now, and that there is need for government to review, also to make that presentation to the economic management team of our government to ensure that the correct revisions are made in order to ensure that things are fair, just, and equitable.
The stakeholder engagement is expected to end by the close of October.
The United States Department of Agriculture has invested about $200 million in the poultry sector through the just-ended Ghana Poultry Project. According to technical lead Raymond Dentep, the investment was in the form of grants to improve egg processing, digitized trading along the value chain, amongst others. He disclosed this at the Ghana Chicken Regulatory Forum, which seeks to educate industry players on regulatory activities.
The poultry sector, in a period of 6 years, has benefited from about $200 million from the United States Department of Agriculture. Speaking to Joy Business, technical lead of the Ghana Poultry Project, Raymond Dente, disclosed that the investment was given out as grants to modernize the poultry industry.
We have trained our farmers to increase their efficiency. Close to 10,000 farmers in the poultry farmers, various actors in the value chain. So in the Ashanti, Brahafo, and Greater Accra region. And we've also done demos with the farmers to prove to them that you can raise your broilers in 6 weeks. And then we have tested models to show that, yes, Ghanaians can supply to some of these international supermarkets in Ghana when they go, after they've been through with us to address some of the requirements that these buyers, commercial consumers want, like the supermarket wants. We had about $2 million in grants that we used to test various models. People are now doing processing eggs. We have people who have online sales. We have people who have groups who have been strengthened. We help the government agencies to develop a number of standards and protocols. We supported the meat inspection regulation, the egg standards, the hatchery standards. We are currently supporting the Veterinary Services Directorate with the Animal Health Bill.
USDA's Ghana Poultry Project held the Ghana Chicken Regulatory Forum, which seeks to educate industry players on regulatory activities. Speaking on the sidelines of the event, Standards Officer at the Ghana Standards Authority, Ali Issa, indicated that regulatory bodies are there to help. Hence, people should not be reluctant to reach out.
Today we talked about the standards that GSA has for the poultry value chain. All right, so we have standards for eggs in shell, we have standards for poultry hatchery, we have standard for dressed poultry. That's the one that we normally buy from the supermarkets and we take home to process. We also have poultry feed, we have standard for chicken sausages and quite a number of them. It's important that players or actors have these standards that they adhere to. You know, people don't normally adhere to standards, but it's important that if you're a processor, you're a producer of eggs or poultry, you need to adhere to standards. All right, so that is why GSA is there. We are there to sort of help you to adhere to the requirements that are in the standard.
And you're watching Business Live. We are taking a short break. When we come back, we have news on Ghana's earnings from traditional exports, which continue to hit levels described as good for the economy. Stay with us. Details coming up.
Hello, my name is Evans Mensah, and you can relive all the fun and excitement on Top Story, Newsnight, and of course, Ghana Connect via podcast. All you need to do is to log on to my Joy Online/podcast. Search for your favorite show and relive the moment. Joy 99.7 FM, your radio for discerning listeners.
Joy 99.7.
And welcome back to Business Live. Now, Ghana's earnings from traditional exports continue to hit levels that could be good for the economy. Latest Bank of Ghana data puts the value at $9.8 billion. George Rafi has more.
From the data, gold ending August this year brought in $3.4 billion. Cocoa, as at the end of August this year, the country had earned $2.1 billion, while oil exports had brought in $2.4 billion. With the exception of gold, oil and other exports have improved greatly in terms of earnings compared to the same period in 2020. On the import side, we spent about $8.9 billion to finance our needs. This was a little bit higher than what we spent in the same period for last year. $1.6 billion went to support our oil imports, while $7.3 billion covered the country's other needs. This resulted in a trade balance of $874 million. For the good export earnings, some analysts say can be linked to the global economy picking up, which had impacted on demand for some commodities. This will go a long way to boost our reserves, a move that will help stabilize the Ghana cedi and aid in the recovery of the Ghanaian economy. The Bank of Ghana, for instance, puts the country's international reserves at $11.4 billion ending August this year. This was far better than the $8.4 billion we had in the same period for last year.
Meanwhile, trading activities with France resulted in Ghana earning over 200 million euros in surplus for last year. Speaking to Joy Business, French ambassador to Ghana, Anne-Sophie Ave, attributed this to a decrease in imports from France coupled with a 30% increase in exports to France by Ghana.
Well, the bilateral trade between France and Ghana is in favor of Ghana. 200 million. So the surplus for Ghana is 200 million. The imports have decreased about 6% and the exports about 30%. But overall, you're still selling more than you're buying from us. I think what's important to say is that when we created Europe, it's difficult to say that something is 100% French, because now the ownership, the goods and products that contribute to whatever products or service we are providing are European. It's 100% French is yes, we do have some 100% French, but we are now completely European, and so we have to look at the trade between Ghana and EU, and that is we are a major partner in this respect, the number one partner when it comes to imports and the second partner when it comes to overall trade. So the EU is a major partner for Ghana.
But so where lie the prospects then, especially when we're having the Continental Free Trade Agreement area with $3.5 trillion at stake? Where lie the prospects for Ghana, France, EU trade?
Well, there's a challenge for Ghana, because with the free trade zone, it will be even easier to operate from Ghana and then access the whole of Africa, even larger than just West Africa. So wherever you settle in Africa, you will shine around all over Africa. So the challenge is to be as attractive as possible for a country, because wherever we will operate, we will have access to the Ghanaian market.
And that ending Business Live tonight. There is more news on our website, myjoyonline.com/business. Thanks for watching, everyone. We are back same time tomorrow.